In this video, a data dump for crypto investors. If you want to get past the headlines of what's going on with SBF, I have tons of on-chain analytics right here, and we have a report from Binance, the biggest player in the industry, as to what is going on across crypto. So let's see how this industry is growing and where we can actually invest and move forward. So I'll leave timestamps for everything down in the description. As always, I want to first come to some updates about what's happening with the industry, because Binance essentially stepped in and seemed to have stopped a lot of the selling with an announcement that they made. So we'll get to that first. Binance came out and said that they are putting together a strategic fund in order to invest millions of dollars into projects that are otherwise very healthy, but are suffering potentially from what's going on with FTX. Now, this is of course something that Binance would do because it's an opportunity for them as investors, but hey, that is what investors do. They buy distressed assets that they think have, good potential that they can get at cheap price. That's what bear markets are for. Binance are doing this, but I think it's also good for the industry in general as well that we have some support right here. Many industry players have come out to actually steady the ship and say that they're investing more. And what's really big as well is Merkle tree proof of reserves for all of the exchanges that aren't complete frauds, right? So you can see one-for-one client assets, and that is proven with on-chain hashes. That is going to become an industry standard. We'll get to the data in a second though, but this is really important. So we know that CZ and Binance are doing this and trying to step forward with the industry, putting together a list of commitments that other exchanges and players should agree to as well. So here they are. Be risk averse with user funds. User funds must never be traded or invested. That is an absolute rule. Crypto exchanges are not banks. They cannot use client reserves and have a rehypothecation of those or anything like that, or fractional reserves. You need one-for-one because you are a brokerage and not a bank. Never use native tokens as collateral. That is what FTX did. Share live proof of assets. Now, Ethereum founder Vitalik Buterin was actually talking with CZ, and they were talking about a potential proof of assets protocol. So a decentralized protocol that proves the assets of exchanges. There's a lot of things to go through with that, but that would obviously have a lot of confidence in the industry. And I get a lot of questions about exchanges. Is this good? Is that one good? What are they doing? Having proof of reserves and having everything on the blockchain is a much better way of doing things, and so this should become industry standard. Keep strong reserves, never take debt or excess leverage to fund growth of the exchange or business, and strengthen and enforce security protocols. As for that, you can see other exchanges coming out right now, like BitGet, saying that they've launched a $5 million builders fund. They've also increased their protection fund, which is money set aside to pay out users in case of loss that wasn't their fault, from $200 million to $300 million. They're a smaller exchange than Binance. Binance has a $1 billion fund. So there are positive things happening in this industry, and we need to go towards these positive players now and stop focusing on what was allegedly just a complete and total fraud. As investors then, we can look at the hard data to see where we should put our money. I want to talk about this now and what I'm thinking right now. So this is Binance research here coming out with just some facts about the industry. The first one is, this is Q3, so a little bit behind. You can see the price here has actually dumped off a little bit since the FTX disaster. But during Q3, I before the FTX thing, which no one can really know beforehand, right? Because you can't see what they're doing. But I was looking at this as a really good consolidation in the industry, where the industry was just taking stock of things. Now the macro has flipped a lot. Stock market's up and is rallying, and Bitcoin has actually gone down because of the FTX disaster. For many, that's not a good thing. For others who have a long-term plan, it's actually opportunities right here. So depends who you are. Now, in terms of coin performance of everything, Bitcoin is the leader in the space. I expect it to remain so. Ethereum is obviously probably the number 2 for a very long time as well. Maybe they will flip, no one can be certain of the future, but what I want to talk about in this video is all of the other parts of the industry and how they are valued in comparison to Bitcoin and ETH. Do you just, should you just buy Bitcoin and ETH, or just Bitcoin if you're a Bitcoiner, right? Or should you actually invest in some altcoins because they have more value? I want to really look at that in this video. I think it's really important. Now, without Bitcoin and ETH, essentially everything else is like, just up and down, left and right, and you just can't really predict too much what's going to happen with all of this. A lot of pretenders, and something goes off for a bit and then comes back. So everything underneath Bitcoin and ETH is extremely volatile, and you have to have a lot of conviction in actually buying those assets, because these are very high growth, but then, they can just get cut straight away. Like you can see, everything under the top two is very, very changeable. And so it's a lot more difficult to invest in those unless you have a long-term mindset and you just want to buy dips on assets that you think might do well, over the long term. One thing I've been tracking a lot during this bear market is that in previous bear markets, Bitcoin has added value and added market share in comparison to altcoins. Now, that is not happening this time. There's a few reasons for that. The first one is I think there are just much more options when it comes to stable coins these days. In previous bear markets, people may have sold alts into BTC because that's what they traded against, and that was kind of the asset that you'd get into. These days, because of the proliferation of stable coins, when people are really risk averse, they're not going to go into Bitcoin, they're going to go into a stable coin. And stable coins provide that outlet for risk averse investors. There's another reason, and I think that's because Ethereum moving to proof of stake and the merge narrative has obviously kept a lot of interest in that. And then you have BNB, much smaller, but still, they actually increased their market share, as you can see here. And another reason for that is that these are proof of stake networks. Proof of stake networks have less that they need to pay out to secure the network. Bitcoin pays a ton of coins out to miners in order for them to keep the network secure. That's a cost that is obviously very important, but Ethereum now and BNB chain don't have that cost. And so that cost goes into essentially buying back the tokens and supporting the price. Now remember, during this FTX debacle, Ethereum network usage was off the charts, and the amount of tokens that were burned actually sent the ETH token emissions negative since the merge. Now that's accretive to the price. So fees are paid, they burn tokens, and they return that value to token holders and stakers. So I think that's a really interesting dynamic over the short term. Now, that's not to say that Bitcoin will continue to lose market share, because Bitcoin is a true currency and store of value, whereas others like these are going to be valued more on the yield that they give you versus their competitors, and there are many competitors, right? So the other thing is that Bitcoin, of course, has a cap on its supply, and each halving reduces that as well. And so we're actually mid-halving for BTC, which it is supposed to be at the low point of its cycle, whereas you look at Ethereum, and they basically went through a halving right now. So in a few years' time, this may change as well as those supply and demand dynamics change. Ethereum is without a doubt the dominant player in smart contract chains, and so it absolutely must be part of your portfolio if you're investing in crypto and not just Bitcoin. It is absolutely dominant, not just by market share, but the size of each transaction on Ethereum is much higher than other chains. Ethereum, for me, is the institutional chain, so institutions are going to be using this. Now, you have other chains on top, for example, Polygon. Polygon is a proof of stake chain at the moment, but they're creating a ZK, which is going to go on top of Ethereum. So again, Polygon might get used and actually have more market share, but at the end of the day, that is going to clear down to Ethereum. Ethereum is the clearing network for digital transactions, and it's the high value network. Other networks like BNB, you see, they've actually increased their margin a little bit, I think, but BNB mostly is retail traders and lower volume per transaction traders. So you'll see in a second, BNB is really for retail investors who are trading or investing smaller amounts, a little bit of gaming there as well. All of those gaming tokens, typically lower amounts. Ethereum is the A1 institutional grade chain for large investments and transactions. Like I said, with gaming, BNB is the leader right here. It makes sense. BNB is much cheaper. Ethereum is going to cost you $5 to transact and exchange tokens. And so really institutions are going to pay this. Normal retail investors don't want to pay those fees. And so as you can see, BNB is the gaming chain. And that's why I think BNB and exchanges on BNB like PancakeSwap, they're going to be changing a lot of those gaming tokens. It's a different market. It's a smaller market. Ethereum has more of the institutional grade exchanging of assets and currencies, and BNB has its own market share, which is more of the retail side of things. So a little bit of diversification in the market segments that these chains are actually going for. So now I want to come on to altcoins and how these are valued and how these investments are going to go versus just Bitcoin and ETH, right? So as you can see, Binance have put in massive work into looking at infrastructure and all of the different market segments that can be invested in within crypto. So you have infrastructure right here. Infrastructure is obviously a massive part of it. Very difficult to invest in this part of the market, in my opinion, because you have so many players. And you can see a few that are actually gaining market share and becoming more important, but that doesn't necessarily correlate to a really great investment in terms of buying their tokens, because a lot of these investments are very, very new. They have a lot of supply left to come onto the market, which means that prices are going to continue to be depressed as that supply comes on. So it's very difficult to invest in these, even though infrastructure is obviously going to be a massive part of it. But there probably are some players in here that have got some very good futures. In terms of infrastructure and DeFi, I'm much more into DeFi right here. So as you can see with insurance, liquidity trading, there's going to be some big names here. And I think that on the Ethereum side, you have lending here. So you have Aave, Compound, Venus on the Binance Smart Chain. Aave, by a million miles, has massive volume in terms of the lending market. You also have exchanges here. And again, there's going to be a few big players. I think Curve, Uniswap, PancakeSwap, really the main players in terms of trading volumes. But the problem is, do these applications actually give good price to earnings ratios? All of this in DeFi. Aave is a lending protocol, it's a business. Curve and Uniswap are exchanges, they're a business. Is there any point investing in this rather than just buying Bitcoin and ETH? Now we can look at probably the best example of this. I want to look at Uniswap right here and understand what potential valuation it may have. We can do this for other apps as well. So let's look at Ethereum, which is the best business built in the crypto industry. It's actually profitable, wildly profitable. I think Ethereum, though, the actual token, ETH, is more of a collateral asset. Rather than just a business, it's a collateral asset and a platform. So very different to something like an exchange built on top, like Uniswap, which I want to get onto. Uniswap is probably the best business built on top of Ethereum. It's very, very profitable. It's an exchange, so it charges people trading fees. Now, the only way this is going to be valuable in the future is if those trading fees get passed back to the token holders, right? Uniswap will be a claim on some of the profits of the protocol. Same as ETH, but ETH is more of a collateral asset and a currency, I think. So with Uniswap, will this be deemed a security? Probably, right? It's an exchange business. I don't think that matters. That's for the regulators. It doesn't matter. If something has value and makes money and passes that back to people, then it will have value. Now, in terms of valuing these things, what we want to look at is, what's the potential value of a Uniswap versus just investing in Bitcoin and ETH, which can potentially have much higher valuations as collateral within a system. Gold potentially, or Bitcoin potentially rivaling gold as that, multiple trillions of dollars. So let's look at what actually Uniswap does. We can see that the fees over the last 30 days, $57 million in fees, annualized a rate of around 700 million. Now you can see that's up 54% recently. With all the FTX disaster, what's happened is people have taken their money out of exchanges and are trading on DEXs. And so a huge amount of trade going through on Uniswap. We can do some price to earnings ratios on here and see what it should be actually valued at. You can see recently trade volumes have spiked for Uniswap right here as people are taking their assets and trading them on DEXs. So how would you value something like this? Well, if we just suggest that this is an exchange business and the fees it charges for exchanging tokens will be the revenue stream, rather than it valued as some sort of collateral or currency, which it definitely isn't, right? So the annualized fees right here are 700 million. Now, as of right now, they don't pass any of this back to token holders. There are suggestions that they may turn on a fee switch, which will give 5 or 10% of those fees back to investors. At the moment, just liquidity providers make money on this protocol, and they don't take any percentage of the fees and give that back to token holders, but that could happen in the future. With fees of 700 million per year, you're looking at, let's say, 10% of that going back to token holders in the future. So you're looking at 70 million in annualized revenue. Now you can very easily put a valuation on that. Let's say a 30 times earnings, which is not extravagant. 30 times earnings for a growth product is absolutely fair. And you're looking at $2.1 billion as a valuation there. So way, way below the current valuation, which is fully diluted 6 billion. Now you're thinking, well, that's probably overvalued, right? We also have to look at potentially what's going to be happening is a much more fees over the long term, right? So if we look at Max right here, we're in a bear market right now, and fees are definitely way lower than they would be. If adoption continues, if more people use Uniswap and Ethereum to trade, we could suggest that they'd be making much more in fees, right? So the trading volumes could definitely go up at least 10x from here, maybe fees going up 10x in terms of over the next decade. So you're looking at 700 million, and that is probably the fees that could accrue to token holders. That would mean around a $7 billion annualized fee income for the protocol. That's pretty big, right? That's a very big business. That is what I would say is probably the best scenario for Uniswap, right? To be a very, very profitable business. But let's just suggest that it could make around $7 billion a year, which is 10x from here, which would be 10% of that would be 700 million to token holders. And what would you put on that as a price to earnings ratio? Let's do 20 to take the price to earnings ratio down as the asset matures. You're looking at a valuation of around 14 billion. And so if you have a 10 years time horizon, you could say to yourself that from a fully diluted market cap of 6 billion here, you're looking at maybe a doubling of the asset price over that time horizon if everything works out. I don't think that that's worth it in comparison to just holding Bitcoin and ETH, which have potentially a 10x in them each anyway, and are much more diversified as an investment. That's just one protocol, and of course the prices change often. And so if Uniswap gets way cheaper, you might go into a trade for that. But for me, I think there's a reason why I just want to consistently go into Bitcoin and ETH, because I think they have much higher terminal values over the long term than virtually all of these assets that are trading in the market right now. That's just my opinion, and it definitely changes over time based on adoption, trading volumes, and also the prices of each of these assets. I also think looking at Bitcoin adoption is extremely important as well, just to understand what's happening here. We've had a terrible year in 2023. It's almost 2022. It's almost over. As you can see, the drawdowns of Bitcoin are becoming lower and lower over time. What is the average price people bought at, and how far below can we go? Insights and charts. Here is the realized price drawdown, and you can see that this is in an uptrend. So over the very long term, Bitcoin has higher lows. Each drawdown, as you can see, is going up in terms of the realized price of that drawdown. Now, we may go way lower here, and we may touch this line, but we're in the buy zone in terms of drawdowns. Very important chart. As you can see here, miner balances. Miners are having a complete capitulation right here. You can see that this is miners coming in and selling their Bitcoin, an absolute travesty. As you can see here, they're just having a nightmare. And that forced the price down when the miners came in. One or a few miners capitulated right here. It's what it was. And they forced this price right down. And as you can see here, the change in miner balances. So a couple of miners have had an absolute nightmare over the last few weeks and have given up their BTC. Now, what you can see here is that the number of addresses with a balance of more than one BTC is absolutely spiking. So this suggests that those miners are selling, and the supply is getting mopped up by investors, and definitely small and medium-sized people, maybe even human beings, just, buying some BTC. And as you can see, massive amounts of retail buying the cheap Bitcoin off the miners that have essentially over leveraged themselves and couldn't afford to run their businesses over this bear market. Addresses with a balance of more than 0.1 BTC. So that is $1,600. So well within the realm of individual investors buying some Bitcoin. And you can see this chart, it's just onwards and upwards. So the Bitcoin protocol and coins getting more diversified over time, with more and more individuals getting on board into the network. We can also see the number of active addresses as well during a bear market up and to the right over the long term. Bitcoin is becoming more adopted as a network, more people are getting involved, and each of the lows in active addresses is getting higher over time. And a massive consolidation right here is just we are down only the whole time. But as you can see, we're still up and to the right over the long term. If you're in Bitcoin for the long term, this data suggests that the fundamentals are very good and that the market for Bitcoin is growing over time, with more people coming on board over the long term. I'll leave links in the description to Binance and BitGet, who are doing deposit bonuses right now, and Ledger, which is a hardware wallet to take your Bitcoin off those exchanges and store it, which is what the blockchain is designed to do. I'm James with Money's EG. Cheers for watching, and I'll see you in the next one.